The 2026 Silver Squeeze. How to make serious money with silver in the next 12 to 24 months right now. In January 2026, silver sits at $93 per ounce after a plus 198% run in the last 12 months. Most people think the party is over. They're wrong. The real move is just starting. We are in a structural supply deficit that has lasted 8 straight years and is getting worse. Demand is exploding from solar, EVs, AI, data centers, and 5G mining can't keep up. The math is simple. The world is using 25 to 30% more silver than is being produced every year, and the gap is widening to 215 to 250 million ounces in 2026. That means prices don't have to go up because of hype. They have to go up because industry literally cannot build the future without silver, and there isn't enough physical metal at any price. This is not speculation. This is physics plus economics. Here's the direct playbook to make real money with silver in 2026 to 2027. No fluff, no stories, just what works. 1. Understand the 2026 price drivers. Know the numbers. 2025 demand. Approximately 1.205 billion ounces, record mine supply. Approximately 820 million ounces flat deficit. 185-200. Mas 2025, 215 to 250 moles, 2026 forecast. Solar alone, 220 moles in 2025, gives 250 to 280 moles. In 2026 EVS, 80 million units. Sold in 2025 gives 0.8 to 1.2 ounces per vehicle. AI data centers. Each hyperscale build consumes 100,000 ounces recycling. Approximately 180 moles max. Can't close the gap. Gold-silver ratio, January 2026, approximately 48 to 1. Historical normal, 15 to 60 to 1 every time it drops below 40 to 1. Silver outperforms gold by 2 to 5 in the next cycle. Realistic 2026 targets. Consensus plus outliers. Conservative, $85, $110. Recession slowed down. Base bull, $130, $160. Deficit, widens. No crash. Aggressive bull, $180, $220 is short squeeze plus panic buying. Moonshot, $250 plus systemic crisis. COMEX defaults, physical shortages. Your job is to position before the crowd wakes up. 2. The 4 best ways to make money with silver in 2026, ranked by risk reward. Physical silver best for long-term wealth preservation. Lowest risk by coins and bars. American Silver Eagle. Canadian Maple Leaf, 100 ounces bars. Generics on dip. Gold. Hold 3 to 10 years. Sell-win ratio 30 to 1, or spot $180. How to buy smart? Buy on 10 to 15% dips below $85, common in corrections. Avoid high premiums greater than 8% over spot shop online dealers plus local shop store safely. Home safe, allocated vault like Brinks, Sprott, or safety deposit box. Expected return, 100 to 300% if $200 target hit. Tax advantage in U.S. Long-term capital gains up to 28% if held 1 year. Be Sprott Physical Silver Trust, PSLV, best set it and forget it vehicle. Physical silver in vault, no storage hassle, very low premium over spot, approximately 1 to 3%. Trade like a stock, fully allocated, audited. Why it beats SLV? No counterparty risk, no lending out metal. Buy on weakness, hold until $150, plus sell into strength. Expected return, 80 to 200%, with much less hassle than physical. See silver mining stocks. Highest upside, highest risks. Leverage play, miners move, 2 to 4 the spot price move. Top picks for 2026. Hecla Mining AHL, largest U.S. primary silver producer. Pan American Silver POs. Diversified, strong balance sheet. First, Majestic AG Pure Play. CI Beta Core Mining CDE. Undervalued turnaround. Wheaton Precious Metals WPM streaming royalty. Lowest risk, pays dividend strategy. Buy when spot corrects 10 to 20%. Sell 50 to 70% when stocks 3 to 4 from entry. Expected return, 300 to 800% in strong bull run, but can drop 60 to 80% in bear phase. Don't you ver fees and leveraged plays. Fast money, very high risk. SLVI shares. Silver Trust. Most liquid. Tracks is Pochisil Global X Silver Miners ETF. Basket of miners leveraged. AGQ2 long. USLV3 long. Only for short-term trades. Used for swing trades on dips, rips, not for holding. 3. Simple 2026 trading and timing rules. Practical execution. Entry zone, $80, $80. Strong buy add more on dips to $75. First target sell. $120, $140 take 30 to 50% profits. Second target, $160, menos $180 take another 30% moon bag, hold rest for $200 or ratio 30 to 1 stop loss, below $70 only if macro collapses recession plus strong dollar. Watch these triggers. COMEX eligible inventory 100 MOs, gives squeeze incoming ratio 40-1, gives acceleration phase. Solar installations data monthly gives demand confirmation Fed rate path, more cuts equals weaker dollar equals higher silver. 4. Risk management. Don't blow up, never allocate greater than 10 to 20% of net worth to silver. Even aggressive bulls, dollar cost average entries keep 30 to 50%. Cash for bigger dips. Diversify. Mix physical plus PSLV plus miners. No, the bear case. Deep recession industrial demand falls 20 to 30%. Price back to $60-$75 temporarily. Bottom line. How much can you realistically make? Examples starting today, Jan 18, 2026, $10,000 in PSLV at $90 spot, $18,000, $25,000 at $160, $220, 80 to 150% gain, $10,000 in physical bars gives $20,000, $30,000 plus at $200 plus $10,000 in miners. POS Hecla gives $30,000, $60,000 plus in strong bull 200 to 500%. The window is open in early 2026. The deficit is structural. The demand is existential. The crowd is still distracted by AI. You don't need to be right forever. You just need to be right for the next 12 to 24 months. Silver's not a maybe. It's a mathematical inevitability. Position now, stack smart. Let the squeeze do the heavy lifting. This is how wealth is transferred in 2026. The question is, are you the one receiving it or watching it happen to someone else?